Hey everybody, so today we talk about the bad boy in town. Talk जिसका नाम अब बदनाम हो गया है Paytm 197 Communications. The stock was down over 12.7% today, breaking the strong resistance that it had at around 600 rupees. So, what is the future of this stock? Will it fall more? How much more will it fall? Should you buy now? Should you wait? Should you sell now? There are so many questions in people's mind about this stock. So today in this video, we are going to try and answer some of those questions. So this stock has been trending as a meme on Twitter for most of the day. People are visibly angry, some are frustrated about the incessant fall of this stock since its listing. So people are sharing the quote of the CFO. We could have priced the IPO much higher, but we decided not to. I'm sure he must be eating his words right now. So the memes are really funny. I wish I had time to show you all of these, but I'm sure you can go and just Google the hashtag Paytm and have a good laugh about it. But then coming to the serious stuff about Paytm stock. So talking about today's fall, the stock just didn't fall today. The decline in the stock price of this stock was backed by a 43% delivery volume, which was more than 2 times the average 20-day delivery volume. So that is the higher than usual delivery volumes on this stock suggest that investors are concerned about the stock's future and are selling the stock for good. So the recent actions of RBI has not just spooked the retail investors who are selling in hordes, but also the analysts. Analysts are concerned that the ban on onboarding of customers by Paytm will lead to a significant impact on the revenue of the business going forward. Although Vijay Shekhar Sharma has been tweeting that this ban will have no major impact as the current customers are not impacted. Another major factor that I have read from all the articles on the news channels is that analysts are concerned about the profitability going forward. So as you all might be aware that Paytm faces stiff competition from Google Pay, Amazon Pay, WhatsApp Pay, MobiKwik, Crore, Bharat Pay, and many other UPI apps. So Paytm has kind of lost the first mover advantage that it had. The launch of Paytm Mall and then selling goods on the Paytm app, that was also a major disaster. Now Paytm has started to move into the lending business and trying to feel itself more as a bank rather than a payment gateway like PayPal. So what this comes across to investors is that the company lacks direction. They don't have a concrete plan of what the company will be 5 years down the line. So let me share some other interesting points that I have noted down about Paytm. So Paytm has lost now about more than 1 lakh crore in market capitalization since its IPO, and the current market cap at today's closing price is under rupees 40,000 crore. So initially it launched with a market cap of 150,000 crore and now it's under 40,000. So Paytm has released some interesting numbers to stem this drastic fall in its stock price, and it's not even the end of the quarter and yet the company has released these numbers to allay investors' concerns, but I don't think it was much of a success. But let me share these numbers with you. So the company said that its gross merchandise value GMV processed through its platform jumped 105% year on year to 1,65,000 crore in the first 2 months, that is Jan and Feb of this year, of the fourth quarter. So GMV is the merchant payments processed through all instruments like Paytm wallet, payment banks, net banking, UPI, debit, credit cards, etc. on the Paytm platform. It said the number of loans dispersed through the platform grew 449% year on year to 4.1 million loans in the first 2 months of the quarter, with approximately 2.2 million loans dispersed in Feb 2022 alone. The value of loans dispersed was 2,000 crore, a year-on-year growth of 366%. The average monthly transacting users (MTU) during the period was 69.5 million, a growth of 41% year on year. So company normally releases these numbers at the end of the quarter or during its annual year presentation. But seeing the continuous fall, the company has released these numbers early. No doubt the numbers look good, but one thing missing in these numbers is profits. The company has recently started distributing loan, people are transacting, but the UPI payment gateway is still free. They don't charge for these transactions. So you can have a transaction rate of 10 lakh crore, but if you're not going to charge them, then you will only lose money because you need to run the servers, you need to pay the employee. The infrastructure itself is very expensive. And as for the loans dispersed, these loans dispersed now will take 2-3 years to start giving the profits as intended. So is it a little too late for Paytm to make a comeback? To be honest, I am not really sure, but the market sentiment is really negative. So even these numbers, which in normal market conditions would have given some cheer to these stocks, in today's negative market sentiment is not affecting the stock at all. So one more interesting statistic to mention here is that it is not only the retail investors who have lost wealth in Paytm. One of the greatest investors of our time has also lost a significant amount of money in his only investment in India. So yes, I'm talking about the Oracle of Omaha, Warren Buffett. So Buffett decided to invest around $300 million in Paytm at a valuation of $10 billion, which is equivalent to around 2,100 crore, for a 2.6% stake in Paytm's holding company in 2018. So people at that time were confident about the success of Paytm, but little did Warren Buffett know that his first and only investment in India would soon turn out to be a loss-making bet. So during the IPO, Buffett's Berkshire decided to offload a small portion of its investment in the Paytm, anticipating huge gains after listing. It didn't liquidate its stake in IPO. It only sold a small percent. So this decision was backed by looking at the listing gains of Zomato and Nykaa. So Berkshire liquidated just $24 million worth of Paytm shares and booked a profit of $16 million with a gain of 68%. And according to the latest data on shareholdings, Berkshire's investment arm now owns 1.56 crore shares, or 2.41% stake in Paytm as of December 31st, 2021. It eventually means that Berkshire's $276 million is still stuck in Paytm and losing its value each day. So as of today, the value of Berkshire's holding of $276 million is now worth less than $100 million. And the other billionaire who has lost a significant amount of wealth is none other than its founder Vijay Shekhar Sharma. So the falling stock has drastically affected Vijay Shekhar Sharma as well, who owns 8.6% of Paytm. So the current value of his holding is around a little less than 700 million, which was $1.7 billion during the IPO. So he has lost a net worth of $1 billion in a matter of months, and he is no longer one of the youngest billionaires in India. I believe this fall won't impact Berkshire Hathaway or Warren Buffett much, but to Vijay Shankar Sharma, waking up each day would be like a nightmare when he looks at the screen and sees his stock tank by another 4 or 5%. So, is there anybody who is optimistic about Paytm going forward? There are a few brokerages who are still backing Paytm with confidence, and they are very positive on the company's outlook going forward. So, from what I have read, Dollar Capital is bullish on Paytm with an estimated target price of 2,500. Goldman Sachs, one of the big four, recently lowered the target price of Paytm to 1600 and again slashed it to 1400, but it is still optimistic on the stock going forward. So JP Morgan in its recent research report was overweight on the stock with a target price of 1850 rupees, citing that the shares trade at a discounted price to its private and global competitors. So it baffles me to see how these companies and these big rating agencies come up with such diverse numbers from 2500 to 1800 to 1400. So apart from this, we have the analyst at Maguire Capital, whose research report had initially started the fall of Paytm. They said that they have further lost confidence in the stock, and they have slashed the target price to around 500 and 550 range. So all these numbers and research reports and statements were made by the big guys. What about me? What do I think of Paytm's future going forward? So Paytm is currently in a very competitive business. It has very big competitors in the form of Amazon, Google, and Facebook. A few years back, Paytm had no competitors. It was a monolithic giant in its own field. We had PayPal outside India, and India we had Paytm. But now in the past few years, so many competitors have come into this space, and Paytm has lost out on its first mover advantage. The company is now trying to market itself as a digital bank, digital payment bank, but the valuation that the banking sector commands is not as high as the current valuation of Paytm, which is a loss-making company. So Paytm made a loss of around 700 odd crores in the last quarter, and which is only going to rise going forward because of the inflationary scenario. So will the company close down or become a penny stock? I believe no, because the company has significant reserves. It has raised a large amount of cash before the IPO, and I believe it has reserves in excess of 20,000 crore. So the company can withstand this fall going forward. But what is the bottom for the stock? So until the company has a clear path to profitability, and if the market sentiments remain negative, the stock may well fall to numbers like 200 or even 100 rupees. Currently there is no bottom for this stock as I see it. Apart from this, if you go through the company's annual statement, you will find that the company has been a cash guzzler. That is, it raised around $5 billion pre-IPO, and it has already burned through almost 70% of those reserves. And if you look at the earnings for the last few fiscals, the company currently has a negative EPS, that is earning per share, of around 40 to 50 rupees. That is, it is losing around 50 rupees of your share value every year. So if you take into account even an EPS of zero, that is, if the company becomes no profit, no loss, the stock price at 590 still looks expensive. So people who are asking how much this stock can fall going forward, to be honest, the scary answer here is the possibility is it can even go to two digits, 90, 80, 50 rupees. The company needs to turn profitable, and it needs to turn profitable fast. Should you buy this stock or should you average it if you already have this stock? No, the answer is a big no. The company won't rise suddenly. The stock price won't suddenly rise in a few days back to 1000 rupees. It will take time. It will give you opportunity. Wait, read the news. Let the company show some signs of improvement in its loss. The market sentiment is negative, so don't hurry to buy this stock and believe that you're getting it at a cheap price just because the IPO was at 2000 rupees. To those who already own this stock, what should you do? I would like to say, if there is a small up move of 5 or 10%, you should get out. Put your money in something like maybe a DMart or a HUL or a Asian Paints, which can help you get back some of your money, which can help you get some part of your investment in the next few months. It's sad to see one of the biggest IPOs eroding the wealth of investors in this way, but it's also a big lesson for many new investors who were investing everything they had in every IPO that came along blindly without doing the research. So it should be a big learning lesson and a learning curve for them. And as for Vijay Shekhar Sharma, he needs to buckle up. This is a time when he can make or break this company. And worst come worst, he will need to sell this company off to a bigger player, maybe an HDFC Bank or even LIC. Who knows what happens going forward. But for this video, I guess it's already a long one, so I hope you like the analysis, and you can share your thoughts in the comment as to how much you feel this stock will fall going forward, or will it go up. So thanks for watching the video and stay tuned for more.